Friends, are you feeling nervous right now? Your altcoin's not pumping while everyone else is in profit? I know you're waiting. In this video, you'll learn why it's happening, when your coins will finally take off, and everything you need to know about Altcoin Season 2025. We're going to uncover secret indicators, bust some big myths, and of course, break down your favorite altcoins one by one. This is your ticket to a real moneymaker season. So hit that subscribe button, smash the like, and let's dive into the future.
3, 2, 1, fire!
Friends, before we dive into the market overview and then into the most promising altcoins, please note, this video is not financial advice. It reflects only my personal views and market assessment. So, always do your own research and invest wisely. Traditionally, when people talk about alt season, most investors picture a certain capital flow sequence. After a strong run from Bitcoin, followed by Ethereum, we usually enter the so-called Phase 3 of alt season. In this phase, profits taken from Bitcoin and Ethereum start to flow into altcoins. First, large cap coins, top 20 or top 50, get a boost. Once those blue chips top out, profits are again taken, and the money rotates into smaller cap altcoins. This cascade effect created the illusion of one synchronized wave lifting all alts. But here's the thing. In this current market cycle, things have changed. The crypto market has matured. Institutional interest is more diversified, and many strong projects now focus on specific niches. As a result, instead of a simple linear capital flow from big to small, we're witnessing capital rotation based on narratives. Here's what that means. Sector rotation is the new meta. Certain sectors or narratives, like AI, RWA, real-world assets, GameFi, or DePIN, suddenly become hot. Focused capital inflow. Capital from Bitcoin. Ethereum profits or previous played-out narratives starts flooding into tokens related to the hot theme. That leads to rapid price surges in those sectors. Narrative peak and profit taking. Once a narrative peaks, investors begin taking profits. But here's the key, that capital doesn't necessarily go into low caps immediately. Rotation into the next narrative. Instead, smart capital starts hunting for the next underpriced or emerging theme. This creates a constant narrative rotation cycle, where different sectors take turns in the spotlight. That's why not all altcoins pump at the same time, even when the broader market is bullish. If some of your bags haven't moved yet, it might simply be because their narrative hasn't started trending. Understanding this rotation model is key to strategic investing and maximizing profits in this cycle. Market segmentation by capitalization, where the money goes. Right now, we're clearly seeing a structured liquidity flow pattern in crypto. Top 20 alts dominate, excluding BTC ETH. In early bull phases, these are the tokens that move first. Why? Because big institutions and retail players prefer large cap coins. They're safer, more liquid, and easier to trade in large volumes. That makes it easier to build positions without moving the price, while also aligning with risk policies of funds. Small caps, top 21 to 300 plus, lag behind. Meanwhile, lower cap alts lag. They require broader market confidence and a more enthusiastic risk appetite. They often won't move until the majors have already pumped and attention starts spilling over. By the way, if you don't want to miss any more videos like this one, and if you want to see more videos about small cap coins, be sure to subscribe to the channel. It's not hard for you, and in return, I promise to make regular and interesting videos. Bottom line, the market heats up top down. That's natural. Liquidity first flows into safer, larger cap assets, then gradually trickles down as risk appetite increases. So, if you're holding small cap alts, be patient. The capital will come, but it takes time and a confident market mood. Lately, a new theory has been floating around in the crypto community. The idea that Bitcoin is permanently decoupling from altcoins, and that alts will never catch up again. Let me be clear, this is misinformation. It's a misunderstanding of market dynamics. In fact, this lag is completely normal and historically proven. In every past cycle, altcoins always lag behind BTC in early bull phases. Bitcoin makes the first big move, attracting attention and drawing capital into the space. Only after BTC stabilizes at new highs does capital rotate into altcoins. We've seen this pattern play out multiple times, and when alts move, they often outperform Bitcoin in percentage gains during their run. It's all part of the natural ebb and flow of capital, so if altcoins are lagging now, that's not a sign of weakness or permanent decoupling. It's just a phase in the cycle, one that usually precedes explosive growth. Stay sharp, trust the data, and always follow historical patterns, not hype. And now let's talk about altcoins, which are likely to be the first to receive an inflow of funds after the so-called overflow of funds from more stable to more volatile assets begins. First, let's talk about hyperliquid. Before we dive into the market review and promising altcoins, make sure to subscribe to my Telegram channel, because I was already talking about this gem way before it started pumping like crazy. And trust me, that wasn't the only call I made in time. Same thing happened with Ethereum. The link is in the video description. Don't miss your shot at Wild X's again. Now, let's talk about hype. Hyperliquid. This project and its token have gone absolutely parabolic in the last year. And no, this isn't just another DEX. This is a full-blown innovative platform, breaking into the ultra-competitive world of decentralized futures. Hyperliquid is built for high performance, ultra-low latency, and efficient derivatives trading, making it a core infrastructure in the growing DeFi space. And now, with the overall bull market heating up and capital flowing from Bitcoin and Ethereum, Hyperliquid is quickly becoming a major capital magnet. Institutional capital is coming in fast. We're seeing clear signs of big money entering Hyperliquid. Hedge funds, family offices, and big TradFi players are increasingly turning to decentralized platforms for diversification and access to new markets. One huge example, Lion Group Holding just created a $600 million crypto treasury reserve, and Hype is the main asset in it. And that's just the beginning. Recently, Sonnet Biotherapeutics, a NASDAQ-listed firm, partnered with Rorschach to launch a digital Hyperliquid-based treasury. After the deal closes, Hyperliquid Strategies Inc. is expected to hold 12.6 million Hype tokens and $305 million in cash, which they plan to use for future Hype purchases. Another one? Inovia, a NASDAQ-listed ophthalmology tech company, secured $50 million through a private equity deal specifically to acquire over 1 million Hype tokens. Hyperliquid is dominating the perp market. This isn't just hype. Hyperliquid is eating up market share and pulling volume from competitors. In fact, they're now undisputed leaders in decentralized perpetuals, holding 80% of the market share among DeFi perp protocols. That's more than double the hard 30% share they had back in November 2024, all in just 6 months. And it gets better. Hyperliquid runs on its own Layer 1 blockchain, HyperEVM, engineered to match centralized exchange speed and performance. It achieves finality in under 1 second, average 0.2 seconds latency, and supports over 200,000 transactions per second. And that makes it one of the strongest infrastructures in the space right now. Volume and liquidity, off the charts. Cumulative trading volume on Hyperliquid is closing in on $1 trillion by early 2025. A massive signal of strong usage and deep liquidity. Plus, the total value locked, TVL, is showing steady and substantial growth. That's a clear sign of growing investor trust and capital commitment. The team is also laser-focused on long-term sustainability. 50% of all platform fees are used to buy back Hype tokens, fueling scarcity and price support. So yeah, I truly believe this one is already becoming a real market leader. Once the real altcoin liquidity wave kicks in, Hyperliquid could easily be one of the first to explode. And I'll be watching it all the way. All right, let's move on to Solana, which, by the way, I've been talking about since it was only $70. This isn't just another Layer 1 blockchain, it's a high-performance platform that's been gaining serious momentum thanks to its unique architecture. It's known for extremely fast transactions, minimal fees, and impressive scalability, making it one of the most attractive alternatives to traditional blockchains out there. In my opinion, it's the top and honestly the only real competitor to Ethereum right now. The Solana ecosystem keeps expanding like crazy. We're talking hundreds, if not thousands, of active projects across different areas, from DeFi protocols offering lending, staking, and DEX to NFT marketplaces, GameFi titles, and innovative Web3 apps. This constant influx of developers and users is a clear sign of how alive and attractive the ecosystem is. As a result, the total value locked, TVL, on Solana keeps climbing, showing a strong increase in capital being locked across its protocols. And that's not just a number. That's a reflection of trust and engagement that's turning Solana into a true financial hub. Solana has taken a dominant position in the DEX sector. In fact, it accounted for 81% of all DEX transactions in the crypto space in 2024. And in the first 5 months of 2025 alone, DEX volume on Solana crossed $890 billion. The stablecoin supply on Solana has also exploded. It's up 7 times over the past 18 months, growing from around $1.5 billion to $11.7 billion, including $1.75 billion worth of USDC issued by Circle on Solana just in May. Thanks to its unmatched technical advantages, Solana has become extremely attractive to institutional investors. Its ability to handle high transaction volumes with top efficiency and low costs fits perfectly with what big capital is looking for: reliable, scalable, and regulation-friendly infrastructure to enter crypto markets. One of the biggest catalysts for Solana right now is the expected approval of a Solana ETF. Given the current market climate and growing interest in crypto ETFs, the approval of a Solana ETF feels like a matter of any day now. Some Solana-based ETFs, like the Rex Osprey Solana ETF, have already attracted over $222 million in trading volume and $69.7 million in net inflows. These ETFs give institutional players a way to get direct exposure to SOL through traditional, regulated financial channels, without the hassle of managing private keys. Analysts are seeing a clear shift in capital from Bitcoin and Ethereum toward altcoins, especially Solana. Bitcoin dominance has dropped from 66% in June to 61.75%, which is a strong signal that Altseason is kicking off. The successful launches of spot ETFs for Bitcoin, which saw over $4 billion in inflows on day one, and Ethereum, which brought in more than $3.2 billion in July 2025, have paved the way for a Solana ETF and the next wave of institutional capital. I think that gives you everything you need to know about this asset. So let's keep going. Now let's talk about Sui. I've been covering this one since it was around $1 too, but that's not the point right now. Sui is an innovative Layer 1 blockchain built by a team with deep experience from Meta, the folks behind Diem and Novi. The platform runs on the Move programming language, which enables exceptional throughput, low latency, and parallel transaction execution. Its object-oriented data model makes it super efficient for handling digital assets, a crucial feature for today's decentralized applications. The Sui ecosystem is growing fast, pulling in both developers and users across DeFi, gaming, NFTs, and Web3 apps. It's especially expanding in sectors like Web3 gaming, Vietnam being one of the hotspots, where Sui's high throughput supports play-to-earn models. The pace of development is strong, and we're seeing total value locked on the network steadily rising. A growing wave of developers is deploying apps and protocols on Sui, showing how focused the platform is on scalability and developer-friendly tools. Sui also brings some real innovation to the table. Take ZK Login, for example. It lets users log in to Web3 apps using familiar Web2 credentials like Google or Apple ID, while maintaining decentralization and privacy. That's a big deal for mass adoption. The network has already reached 171.6 million total active accounts and processed over 10.8 billion transactions. Sui is built for high throughput, low fees, and user-focused innovation. It uses the Move language for fast, composable smart contracts and brings strong security to the table. In testing, SUI has hit up to 297,000 transactions per second, TPS, with finality in about 400 milliseconds. Even in testnets, it's shown consistent performance at 120,000 transactions per second, way ahead of many other Layer 1 protocols. And that's just scratching the surface. Now let's get to the good stuff. On March 17, 2025, Canary Funds filed a proposal for a spot ETF called the Canary SUI. Then on April 25, 2025, the Cboe BZX exchange published the proposed rule change. The SEC kicked off proceedings on July 22, 2025, and now has 240 calendar days, roughly until December 25th, to decide whether to approve or reject. This delay is procedural, not a rejection. One big twist with the proposed SUI ETF is that it could stake a portion of its assets to generate rewards, unlike Bitcoin ETFs. That income-generating angle is a major differentiator for attracting institutional capital looking for alternative yield. 21 Shares is also getting close to listing its own SUI ETF on Nasdaq, which would be a big move toward institutional access. As of July 23, 2025, LGHL already holds 1,015,680 SUI tokens as part of its treasury. SUI is shaping up to be a top contender for this next wave of institutional flows. With its high throughput, up to 297,000 transactions per second in tests, and low fees, it checks all the boxes institutions are looking for, and the growing TVL speaks volumes about investor confidence. And that's it. Remember that these are just my thoughts on the market, not financial advice. Always do your own research before investing. Thank you for watching. Subscribe, like, and stay tuned for more coin reviews. See you soon.